Welcome back and thanks for watching the Daily Meta. We got a great show planned for you today featuring all the latest in cryptocurrency and blockchain news. At the time of recording, the market cap of the entire cryptocurrency industry is just over $1 trillion with a 24-hour volume of around 74 billion. Dominance still in Bitcoin's favor with 41.2% and Ethereum coming in second with 18.6%. Here's a list of the top 10 cryptocurrencies in the industry today. Bitcoin holding that number 1 spot and Dogecoin finishing off the list at number 10. Today on the Daily Meta, we're bringing you some short clips from the Lex Fridman podcast where he hosted Brian Armstrong, the CEO of Coinbase. I hope you enjoy. Thanks for watching.
Before I'll ask even bigger questions, but it's just a nice kind of palate cleansing question of what is Coinbase?
Coinbase is a cryptocurrency exchange, brokerage, custodian. Basically, we're the primary financial account for people in the crypto economy, how they buy crypto, how they store it, how they use it increasingly in different ways. We can talk about that. We want to be the way that 1 billion people hopefully access the open financial system globally.
How does it work? What's cryptocurrency? You know, there's Bitcoin, there's Ethereum. What does it mean to be an exchange? What does it mean to store? What does it mean to transact? What does Coinbase actually do?
Okay, so basically in any given market, there's some people who want to buy, some people who want to sell, and you keep an order book of all those prices. And then, if someone's willing to buy for more than the lowest price someone is willing to sell, then, you get a trade to execute. That's kind of how an exchange works underneath. And a brokerage is kind of simpler than that even. You don't have to look at the whole order book and everything, but you just go in there and you say, I want to buy $100 of Bitcoin or whatever cryptocurrency. You get a quote, and if you like it, you can hit accept. And, the core things that we do to make all that kind of just work, make it seamless, it sounds simple on the surface, is we have to do payment integrations, in a variety of places around the world to make it easy for people to get fiat currency into this ecosystem. We have to work on cybersecurity a lot. There's lots of hackers out there trying to break into our systems and steal crypto or to put stolen credit cards and bank accounts and things like that into these systems. We have to integrate with the blockchains themselves, right? Which are periodically getting updated and having various airdrops and all kinds of things. So we're integrated with lots of different blockchains. And then we have to store the crypto that people buy securely as well. So crypto is kind of like you store the private keys essentially. And we've invented a lot of cool technology about how to do that securely that helps me sleep at night as one of the largest crypto custodians out there. So those are some of the pieces that had to come together to get that early, simple buy-sell experience to work. And Coinbase actually has a lot of different products now. So we have like an institutional product. We have Coinbase Commerce, which is like merchant payments, like Stripe for crypto. We've got a self-custodial wallet, which we can talk about. There's all kinds of cool applications people are building with Web3, and they can access it through that. We just launched an NFT product. I can go on down the list. So we're sort of like a portfolio of crypto products now. We're big enough where we can do multiple things. But the core thing we got started with, and still the majority of our revenue today, is people just want to come in and buy and sell some crypto, and we help them do that and make it simple and easy to use.
So is Uniswap in some sense a competitor to Coinbase? In which way is it, and which way is it not? So because for people who don't know, Coinbase is centralized. So let me ask, doesn't that go against the spirit of crypto since crypto is decentralized? What are the pros and cons of being centralized as an exchange?
So I don't think Coinbase is fully centralized. We have many different products. And the way that I think about it is that our exchange or our brokerage is a centralized, regulated financial service business. And it's actually important for the crypto ecosystem to have that because you want to allow a lot of the fiat money in the world to flow into the crypto economy. So we're very proud of that. And I think we've helped a lot of that money flow in. Now, once people have money in crypto, they can choose to hold it in a variety of ways. And they can choose to hold it in a self-custodial wallet, which is more decentralized. They can choose to use decentralized exchanges, which we love. And Uniswap is not really, I don't think of them as like a direct competitor to us. We basically have integrated Uniswap into a number of our products. We love DeFi, decentralized exchanges, the whole thing. So and Coinbase Wallet, which is a self-custodial wallet, is more decentralized, and it allows people to hold their own crypto. They don't have to trust
But
us.
isn't a self-custodial wallet a competitor as a notion to Coinbase?
No, I mean we offer a self-custodial wallet. We've built one, and it's like.
But doesn't it bleed the, like, I guess I'm asking a sort of a financial question, is like, how does Coinbase make money on transactions? So does this does not decrease the number, or does not significantly negatively affect transactions? Or are you more focused on growing the number of the pie of the number of people that are using cryptocurrency?
Yeah, like a traditional financial service firm would probably say, well, we should be storing, let's keep more of the custody with us because that's how we prove to the world that we're valuable or whatever. I don't really believe that. Like, I think that actually we kind of want to encourage our users to move to self-custody over time for those who are ready and willing. And that technology needs to mature. I'm not trying to like force anybody to do it who doesn't want to do it. But to me, that's like the future of how we get billions of people using crypto.
But doesn't that mean they can go somewhere else easier?
Yeah, that's sort of the point, is like we're all using the same protocol. So there's low switching costs, which keeps all the companies accountable, right? Like if you want to access the Visa network, there's only one company in the world you can go through to do that, like Visa. But if you want to access the Bitcoin network, there's dozens or hundreds of companies out there who can do that. So it's, it's arguably, you could argue it's worse for us as a company, but I think it's better it's what makes Bitcoin interesting and cryptocurrency interesting, is that nobody controls it. There is low switching cost for customers. It's better for customers. And that means that all the companies in the space are going to be held to a high standard, because the minute you lose someone's trust, they're just going to move their Bitcoin to some other service. And that's good for the world. There's our centralized products and decentralized products, right? The centralized products, we are storing that crypto for you. And so if you're moving from one of your accounts to another account, like an ETH1 account to ETH2 account, or from my ETH Coinbase centralized account to your ETH centralized, so we can do that transaction off chain to make it faster, and it saves the customer fees, and it just confirms instantly. But it's not truly using the decentralized blockchain, right? So you can also send to any Bitcoin address or Ethereum address, for instance, and that is putting the transaction on chain. Now, our decentralized products like Coinbase Wallet, the self-custodial wallet, every transaction is happening on chain with that. And
so what does it take to become to become an asset, to become a cryptocurrency on Coinbase, to add your technology to Coinbase?
Okay, well, so we're trying to get away from this idea of being listed on Coinbase as being seen as like an endorsement or something, because I actually think it's very important that we are not considered judge and jury about, so what do we do? I mean, we basically have a test of legality, right? We check, do we believe this is a security? If so, it can't be listed on Coinbase, and there's a very rigorous process we go through for that. Just currently, the way the laws are in the U.S., you can't do that, and we acquired a broker-dealer license from the SEC. We're trying to work with them to get that operational, and hopefully someday we can trade real crypto securities. But today, that's not possible in the U.S. at least. Then we look at sort of the cybersecurity of the crypto asset. Do we think there's some flaw in the smart contract, or a way that somebody could manipulate it without the customer's permission? We look at some compliance pieces to it as well, like the actors behind it, and like their any kind of criminal history, anything like that. But if we believe it meets our listing standards, basically this test of legality and everything for customer protection, then we want to list it, because we want the market to at that point decide. And it's kind of like Amazon or something like that, where a product might have 3 stars or it might have 5 stars, but if it starts to get 1 star consistently, like it's probably fraudulent or it's defective or something, like maybe Amazon will remove it. But otherwise, you want to let the market decide what these things are. So that's generally how we do it. And by the way, more and more of these assets, I think especially like low market cap assets, are going to be traded on DEXs through Coinbase. It's not that we don't need to list every asset on a centralized exchange. I think DEXs are really good for the long tail. And then it becomes it's even more clear to people, like, this is not some endorsement by Coinbase of like, this asset's good and this one's bad. Like, my belief is there's going to be millions of these assets over time. And so I hope it doesn't like make news every time we add one in the future, basically.
Yeah. You're thinking of like Amazon star type system where the people could rate.
Yeah. So I think we'll actually probably add like user ratings and reviews. So, and we'll be very cautious about like these are real people. There's a bunch of stuff we have to do for that already. So I think wisdom of the crowds is good in terms of getting feedback on items. But we're going to do our own review, which I mentioned earlier, right? Which is like, okay, it meets this minimum bar to be listed on our site.
Yeah.
So I think, both are important.
How do you know if a coin is a scam or not?
Well, you can see a few things. So, I hate to use the word scam because a lot of these are judgment calls. You got to a court may or a jury may land either way. But things that would be red flags to look at would be, is a bunch of the asset owned by an insider or insiders with short vesting periods. Does the background of the founders, like they may have criminal records or if they've perpetrated other frauds in the past, right? There's a difference between something which is just a Me Too product that's like doesn't have anything interesting about it, and something that's an actual fraud or outright scam. And you have to. A lot of this data, what's cool about it is that it's now available on chain. You can look at like the tokenomics behind it and see who owns
tokenomics,
it. And are they and are they selling it, in like inappropriately, or are they pumping it on like YouTube and Twitter and making promises about, hey, the value of this thing may be higher in the future, and like all those are just big no-nos that we would we just don't want to go there. So our whole thing is like we want to enable innovation in this space, but not allow anybody to curtail the advancement of this industry by like doing some kind of fraudulent thing or get rich quick thing. So
a tricky one to add to a centralized exchange, which is privacy preserving cryptocurrency. So like Monero.
Yeah.
Is that technically difficult, or is that why is like Monero, for example, forget that specific one, but like privacy preserving cryptocurrency blockchains, why is that ever possible to add?
So that's a great question. So the answer is maybe. So here's the reason why. So because we're a regulated financial service business, we have various licenses to do that. We are regulated by various regulators. Part of those licenses requires us to have a, quote, reasonable program to monitor for suspicious activity. An AML program, anti-money laundering, right? And so if a coin is 100% anonymous and we can't really do blockchain analytics to track source of funds and where these things might be going, it makes it harder to have a reasonable program around that's defensible. Now, there are privacy preserving coins like Zcash, which have something called a view key. And a view key is basically another key which allows you to de-anonymize the transactions in specific situations where you want that. So for instance, we do support Zcash. And one of the ways we got comfortable with that is that when you're buying it on Coinbase, you can basically have a view key. The transactions are not anonymous while you're buying it, and we can see where it goes afterwards and do our whole standard program. Now, if it gets a few hops away down the road, people could eventually turn on privacy preserving aspects. So, these are tough judgment calls, but at least in terms of our interaction with the customer and everything, we feel comfortable at that. I think there's a broader point here, which is that I actually think privacy coins are a good thing for the world, and they should be allowed. And more like, despite we've made this judgment call to operate in a regulated and safe and compliant way, but just taking my Coinbase hat off for a minute, I think the world would be a better place if there were more privacy coins, because it's kind of like the internet when it first came online. Like there was no HTTPS, everything was HTTP, and there was, so people were afraid to put their credit cards on the internet, and your messages could be intercepted and all this stuff. And now the whole internet has basically moved to HTTPS with a little lock icon in your browser, which is better. Like, and financial information is like the most important information to keep private, right? So there's times where, like, let's say you're running a charity or something and you want to have total auditability, transparency for the whole world, who donated and where did the money go? That's great. You want it to be public. But if it's like your personal money or something like that, you don't want to be broadcasting that to the whole world. And in some ways, that's what blockchains are doing, pseudonymously, because but it is a public ledger. And so if you can know who owns each address, you can basically de-anonymize it. I think basically the people should fight for privacy and freedoms of all kind, but privacy of money is a good thing. So I would like to see more of that in the future.